Hi, this is Michael Rony Mullick, and you're watching the post market show. It is a Friday. We expected negativity in the market. That happened, and it was again discussed because of the negative global cues. We yesterday saw European markets down, Asian markets down, even the US market was down significantly. So we did expect the markets to fall, and that is exactly what has happened. And also, we talked about the US jobs data coming out today at 6 p.m. That also has been announced, and that was the fear that the jobs will be higher than what it was previously, and that would, let the Fed hike the interest rate even further. But thankfully, that did not happen. The jobs came out lower than previous what was expected. So let us start the video with that. So this is the US non-farms payroll you have in front of me. I have in front of me, and 2,25,000 jobs were expected, and it came out at 2,09,000 jobs. So this is significantly lower than expectation, and unemployment rate has remained at 3.6%, which was in line with expectation. So definitely jobs coming out lower than what was expected. That would probably ease out on the rate hikes, at least. So let us see. But now people are worrying that next week the consumer price inflation data of US is going to be announced, and probably that can have an effect on the market. So those are there to be discussed next week. But this week, what was feared, that has not happened. So US markets are now flat. It is recovering slowly. So we will get into that. But let us discuss Nifty first. So let us open up the 15-minute chart to look at the price action. So you can see the markets, it opened with a gap down as expected, and then what happened, interestingly, the markets moved up in the first 45 minutes, and you can see in fact markets broke yesterday's high, which was very unexpected. 19,522, just 10 points more than yesterday. That is where the markets headed, but then came the fall, and you can see the markets fell, and it was a one-sided fall, and you can see it had fallen almost 178 points in a matter of 4 hours. And so this is what it has happened, and then there was a recovery, but again after 3 p.m. That the move that we expect, that has happened. A 3 p.m. fall again made the markets fall even further. So this was the entire scenario, and overall going through the levels also we discussed that were respected. That is good to see. Nifty, we talked about 19,432 levels to be acting as a support. It did act as a support in the first candle. In again around 10:45, markets came down. That started acting as a resistance, and then you can see beautifully after the 3 o'clock move, we talked about 19,330 acting as a support level, and markets closed exactly around that level. So that is again very good to see. So Nifty down by 0.85%, almost 165 points down, closed at 19,331. So this is Nifty for you. So come to Bank Nifty. Interestingly, Bank Nifty had also respected the levels we discussed. It opened with a gap down as expected, and then Bank Nifty broke through the 45,075 levels in the morning, and then it came and fell as low as, I think, 44,850 levels. And from there it shot up, and again, where did it take resistance? It took resistance exactly where we had marked, 45,074, and then it came down once again. The 3 o'clock move that we were talking about, that happened in Bank Nifty as well. So Bank Nifty finally ending below 45,000, and almost 414 points down, 0.92%. So this is Bank Nifty. Coming to the small caps and mid caps, and we were seeing yesterday all of them made an all-time high. So today Nifty mid caps is down by 0.8%, and Nifty small cap is down by 0.29%. Talking about Nifty sectoral indices, we have most of the sectors have ended in the red after many days, and although there are some sectors which outperformed, among them are Nifty Media, not that important. It is up by 3.9%. Nifty Auto did well on the backs of Tata Motors, which announced good figures, good wholesale sales figures globally. That is there. And the Nifty PSU Bank Index once again moved up by 0.98%. So these are the stocks which did well. Apart from that, everything ended in the red. And talking about the weakest sector today, it was FMCG. and FMCG is down by almost 1.5 percentage, followed by Nifty. Private banks, that fell close to 1.1 percentage. Then IT is also down, and we are also expecting IT results, which are going to start from coming in from next week, and they are supposed to be not that great. So that is what the market expecting. Apart from that, all other sectors fell, and most of them are below 1 percentage, like Nifty Energy, Nifty Pharma, Nifty Metal. So everything is down today. So this is the situation talking about FII, DII buying and selling activities. DIIs have booked massive amount of profits, and yesterday we saw they have sold around 2300 crores. Today they have sold around 2900 crores. But what was missing today was the FII buying. They have been on a buying spree since last many days, and today they did buy, but they did not buy to compensate for the selling of DIIs. So they have bought for just 790 crores. Net institutional figure is more than 2200 crore negative. That is again playing a significant role in why the markets are down so much today. So that is, they are talking about index movers. We talked about Tata Motors, that is up 2.9 percentage today. Along with that, Titan made an all-time high, 1.2 percentage up. M&M, TCS, State Bank, and Bharti Airtel, they are all up, but these are not Nifty heavyweights. But Nifty heavyweights, they are, where are they? They are all in the top draggers, and that is why Nifty was down so much. So talk about ICICI Bank down by 1.63%, 36 percentage. HDFC Bank down. Hindustan Lever. Then we have Infosys, ITC. All of these are down. And you can see most of the Nifty 50 stocks have dragged the Nifty down. So obviously the markets were supposed to end in the red. So this is the situation overall. And if you talk about other things, let us look into the global markets now, the US markets and how they are trading. And let me open up US markets. Yes, US VIX, I told you US markets are doing better because the jobs were lower than expected. And you can see they're right now in green, but very, very little. S&P 500 opened 0.07 percentage in the green. Nasdaq is kind of Dow Jones is slightly down. If you look at the 15-minute chart, I think it will be clear. Yeah, it opened with a gap down, but now it is recovering and moving up. Nasdaq is also, I think it is up the highest, 0.18 percentage up. Talking about VIX, US VIX has crashed today. If you remember yesterday, it has shot up at more than 12 percentage. So now it is coming down. In fact, yesterday itself it was coming down steadily, and today the VIX has fallen close to 5 percentage. India VIX has also fallen by 2.6 percentage despite the market falling, which is usually it's a bit unusual, but that has happened today. So this is the situation. Now let's talk about the global markets and see how they are trading. Talking about UK markets, they are down. They are on a downtrend. As you can see, for the last 3 days they have been crashing down, but there looks to be a support around this level. This is the 20th of March levels, so that is very, very close to that. So your UK markets are once again down today, but German and French markets are recovering from yesterday's fall. They are both up by 0.4 percentage. Coming to the Asian markets, we have 3 of them are in red, which is Hong Kong, the Japanese market, and the Korean markets are down, but Chinese markets are slightly up. So this is the situation. Global markets seem kind of mixed right now after the US's data which was announced. Coming to commodities, crude oil prices are shooting up once again. Yesterday we saw it was flat, but we made a target of around 74.5 to 75. That is, it is inching higher and higher and close to that level, 1.5 percentage up. Gold, we expected it to fall, but right now it is looking like it has a shot up, but let's see where it closes. That is going to be important. Gold is up 1.07 percentage. Let's see the other currency. We talked about USD INR becoming very, very weak because the US expected a further rate hike, and I think it was the weakest since May. So that was very interesting. But today it has cooled off a little, and Indian rupee gained some strength, 0.19 percentage. It is down, so 82.577 right now. Dollar index are continuing to fall. They are down by 0.7 percentage, so that is quite significant. And this is because the US, the fear that was there, it is not there anymore for the time being. So that is why dollar index is falling again, and that is supposed to make the equity markets stronger. So we have to see what has happened. GIFT Nifty, that is the SGX Nifty that we talk about. So that is turned into GIFT Nifty now. So since it has shifted its base from Singapore to Gujarat, so GIFT Nifty is up and it is at 19,447. So that is significantly higher from where we were, where we closed. So that is there. Now let us look into the open interest. 13th of July, next Thursday's expiry. Put call ratio is very, very poor in both Nifty and Bank Nifty. 0.698 is where it is. Extreme bearishness, it is telling us 90,400, 500 having massive amounts of call. And talking about puts, we have puts at 19,300 and then 19,000. So people are not that much into selling puts. It was all calls today. In fact, 900 and 20,000 added a lot of calls as well. Coming to Bank Nifty, very, very similar situation. Highest amount of call is at 45,000, followed by 45, 100, 200 and 300. Talking about puts, there are some puts on 45,000. People who have sold earlier, that was there. But talking about significant build-up, that is at 44,700. That is where the support seems to be based on the open interest levels. But it's Thursday, a lot of days are there until that happens. So let's see which side the market reacts. Now, if you talk about the levels, we have to look at, in case of Nifty, there are multiple levels. So I think daily charts would be helping. So first, let's move into the weekly charts and see. Yeah, the weekly candle was a green candle. So the weekly low is going to be important. That is around 19,230. Yeah, that is, let's mark that level because this was the weekly low. So then, let's keep that marked. So I think below 19,230, if the markets falls below that level, we can expect a further fall in the market. And 19,000 is going to be a major level. If 19,000 is broken, that would change the mindset of the people, because the bullish people, the people who are betting bullish on the bullish side of the market, their confidence would be hampered once 90,000 is broken. So we have to wait for that. And these kind of falls are, I won't say it is impossible, because we have been talking about the negative global cues and also the markets. People would like to book profits at these levels, and that is what has happened. So let's see which side the market moves. Now we have resistance levels, multiple resistance levels on the upside, 19,400, and then the all-time high level today, 19,500, 22 or 23 levels, let's say. Looking down below, 19,330 is the center level, down below 19,233, and then we have 19,011, that is, or 19,000, let's say, that is going to be important. So these are the levels to watch out in case of Nifty for Monday. Bank Nifty, let us look at the weekly levels in Bank Nifty and see what has happened. Yeah, this is the weekly chart of Bank Nifty. I know there's a lot of lines, but let's mark the weekly low. I think somewhere around here. Yeah, that is where it did, what it looks like. Yeah. Now coming to 15-minute chart. So a weekly low is going to be 44,845. That is where the markets have taken support today. So that is going to be very, very important. Apart from that, 44,700 looks to be important, and down below 44,500 should act as a good solid support. Up above, we have multiple resistances now that markets are below 45,000. We have 45,000 one level, psychological level, then 45,000, 380 to 400 levels, and finally 45,650. That was the all-time high. These will be acting as resistances going forward. Now next week there are multiple data points to be announced, like US GDP, US consumer price inflation, also Indian inflation data. All of those are coming. That will be having an impact on the market. So keep an eye out for those. Apart from that, the corporate results, starting with the IT, will be starting to flow in coming from next week. So a lot of actions are going to be there in the market. And let's see the global markets, how do they react over the weekend. And that is all from my side. Hope you have a very good weekend. Thank you for watching and have a good night.